Good evening, all. Ira Epstein with your SPDR ETF stock market wrap-up, and this wrap-up is for December 8th, Thursday, 2022. All right, my friends, so now we start into the serious nitty-gritty stuff. We started today, we've got some jobless numbers, and they're increasing, but at a snail's pace on the weekly. The continuing jump, I like to see that because that's one of the things the Fed is looking at. When we look at energy, the Fed's got to be discussing it at some point. I know it's not core number, but they're still going to be saying the impression of it because, look, you've gotten crude oil in the U.S. The front month is around $71.50. So it's cracked for new lows for the year. Gasoline prices have crashed. There's no other word for it. The same in nat gas. So the energy sector has come down and come down hard, and it's no longer, if you will, the inflation part of the economy. We know what the inflation part is. It's labor. And the labor drives the service sector and things like that. And you know the service is going to be good this time of the year. Come on, how many Christmas parties are going to go on? We don't live in the UK where the rail strikes are happening and the pubs, unfortunately, and the restaurants are going to get decimated. Because when you can't bring people in and out of the city, end of it. So I'm hearing cancellations 30%, 60%. This is the big part of the year for that part of the service industry. You don't want to lose that. I mean, you need it. That's what keeps them going. And it's not going to be good there. But I'm getting off track because that's the inflation part. So we get PPI tomorrow, in addition to the University of Michigan consumer confidence numbers. Next week, we get CPI. If those numbers are hot, I don't know that the Fed cannot go 75 basis points. If those numbers show weakness, the Fed can then stay with the idea of 50, depending on how everybody fights in the battle room about it. Now, what does weakness mean? That's going to be the definition. Obviously, if they roll over hard, everybody's going to say, and I would, hey, the lag effect is here. But if it does what the jobless numbers are doing, just gradual moves, why not go with the 75? Give it a kick in the butt and send it down the road to get it going. That would be, at least, I think, school of thought that I'm with. All right. So we take a look at Alibaba, a new high for the move. That was pretty interesting what it did. If you take a look at this market, it had come down, and today, boy, that's a big jump, and it just kept going. Now, the trend has been up. You've had the higher lows, the higher highs, so you're looking for the bullishness. It balked right here at the 200-day average. Now it's back to it. So where's our other resistance point, the upper Bollinger Band? And that upper Bollinger Band is right here, right above you now at 95.45, another $1.30, what is that, $1.28 higher. Look for the resistance in there. That's the point that I'm making. Very difficult buy over that unless you get embedded. So did we embed? Well, you've got both numbers over 90 today. What about yesterday, being Wednesday? Both numbers were over 80. Okay, what about Tuesday? Both numbers on Tuesday were there. So Tuesday, Wednesday, Thursday, you got your embedded reading. So that's what you care about, which tells me even the resistance here on good breaks until the red line closes under 79, the market is still going to get bought by the pros. They won't buy Bollinger Bands. I'm pretty confident of what I'm saying there, but they will buy the break from there. So if the market were just to break down tomorrow, I think you'd get buyers. They'd bail on a reading in the red number if it closes under 79. In LIT, the battleground is right here. Big fighting in this market at the 18-day average, and it's been doing it since the first challenges here. Very difficult to make anything out of that. It's a bear market rally because the swing line is up, higher lows, higher highs, but you're staying under the 18-day average. The 18-day average is your line in the sand. When you're under it, you have a bearish bias. So if you have a filter, think about it, you got a buy signal on the swing line and the filter is saying, no, I've got downside bias. You want the buy signal and you want the filter to turn bullish, then its systems go for up there. That's one of the ways, the simplistic ways to look at it. What about Apple? Well, you're down to the lower numbers here, and you found your support. Learn Bollinger Bands. Honestly, make yourself a promise to learn Bollinger Bands. I think I teach it one of the best ways you've ever seen. That doesn't mean there aren't somebody else that teaches it another way. I think my way makes sense, easy to learn. You tie it together with momentum and you have a tool. No tool works all the time, but you're looking for tools that you can hang your hat on. I hang my hat on it every single day, and I'll live with it because I've seen what it does. Disney, we've talked about this. For my money, I'm throwing away the chart. I don't want to be bearish. I don't want to play. I want to see Avatar, and I want to see the numbers that it's going to put up. If it does what it's supposed to do, it's going to be a monster for Disney. If it can't cover its cost, you got a real problem. Now, it won't rest on Bob Iger's shoulders. He didn't do this. This is obviously newer Disney that are gone, Mr. Chapek and so on. But I don't want to be short when I know the biggest blockbuster in years is being released. Theaters everywhere, they're counting on it. I'm going to back away. XLF, well, as you can see, you're fighting lower highs, lower lows, big battleground here at the Bollinger Band, now down to the 200-day average, and you're oversold. I'll let somebody else want to carry the shorts from that point. XLI, the industrial sector, void of trend. What you did is you've narrowed the market into no volatility. Look at how wide the Bollinger Bands were and the arc they had up. From this point, the market rolled, and it's just going sideways now as you've corrected and oversold. But first, you had an embedded reading. So when you have embedded readings in a market, and I'm going to bring you back to it. This was the embedded part. This is where the trend changed. You're fully embedded, making your run again at the Bollinger Band, and that red number closes 77. The game is over the way that I teach charting. Now, admittedly, the very next day it could re-embed with a big up move. They do happen, not often. You don't play for it. So I teach clients, now you got to walk away from that type of market because you can get yourself caught here as the market just starts marching around going nowhere. Tell me that's not what it's done. So you take your money, you deploy it elsewhere, you put it in your pocket, whatever you're going to do, but you let this run its course, and we take another look later. Later, not now. Semiconductors. So you've gone from that nice rally down into the support of the combination of the 200-day average in the gray, the Bollinger Band. 200-day average is a big average. It's a one-year average for all purposes. Why do you want to fight that? The first challenge of it, the smart money walks away. They'll go, okay, it got down there, it's in support. And of course, the Bollinger Band, only 5% of the time do you close outside of it. It's time to walk away. So I think the short's covered. Now, the home builders, they're doing better than I thought. I understood Toll Brothers. But why this is doing well is people want to be the first one on the block to own this because they're saying, you know something? I'm looking at mortgage rates and they're down to 6.4, 6.3. They're falling. People are coming back. Oh, no, they're not so fast. No, they're not. I don't think this is the best move you can make. Number one, we're in winter. Let's see what the Fed does. Let's see if it's 50 or 75 basis points. Let's see what the reports do. What'll kill this market is the Fed goes 75 and these reports are red hot and they might have to go 75 in February again. What does that do for the spring planning for the home builders? Got it? Got to use your head a little bit, in my opinion, right there. In XLE, the energy still bearish. I mean, if the world's in a recession, China is not exporting or importing. You saw their numbers. If you get my written reports, I wrote all about it in detail. Big problems there. And that's why they're addressing their zero COVID tolerance. It's not that they want to do this. They don't have a choice. President Xi has one-handed broken the economy. It's his fault. He didn't do anything right with this. He didn't pay attention to Western medicine that could have helped. But now he's got to resurrect it. So they are doing it. but they do things their own way. Respect it. It's their country, not our country, and it's not a democracy, right? It's not a democracy, and that's coming down. Now, it's interesting to see that China ran over President Xi to meet with the Saudis. And remember, the Saudis are still major suppliers of oil, so we'll see if there's deal. Whenever the head of a country comes, they walk away with deals. You know that. You don't visit without a deal of some type. That's typically what is done. We don't do enough of that with Trudeau. We should be. Right over the border, or Luis down in Mexico. They're right here. They're our big trading partners. I'd be courting them all the time. You can see how the market's coming down through here, lower highs, lower lows. You might be headed to this 82 level yet. So be careful here. There's nothing that friendly. In the metals, they're hoping for the inflation story to be the weaker dollar. They know that the government's going to attack the inflation, but if the dollar breaks, this is priced in dollars. And I think you'd have to agree, this rally began, if you go look at your chart, when the dollar index was at 114, lay one on the other. This took off from that point in time. Maybe I should do one of those charts one time for you. And that's basically what has gone on. Silver, the same story. You're counting on the fact that the dollar's weaker and you're going to have demand for goods, commodities priced in dollars across the board. And in copper, you got the story of that. Then you got China trying to figure out how to get all these things going. But I don't like the pattern in copper up here. The market has now lost its embedded reading. It seems to be drifting. It's come up dramatically from, if you take a look here, the 27, let's call it 27, 28, you've gone up a third in value. I'd be a little bit cautious is the word I'm using. I'm not bearish, I'd be cautious. TLT, I think you got to walk away from this. BND, EFA, why do you want those positions going into this report? If you go to Vegas, you're probably going to get a free drink, get pretty people to look at, have a shot at a table, be there all night having a good time. You want to gamble on this through the FOMC meeting, which is boring, and a dramatic reaction if things don't go the way you think. I don't know. That to me is not the fun. UUP. So we're coming down to big support. You're at the combination of the 200-day and the Bollinger Band. Now, the market has been trying its darn best. If we take a look at it and come back just a little, you lost the embedded reading. Then you come back the next day and you keep it lost. Then we get both numbers today are under 20 again. In order to embed, it's got to have 2 more days. So it's just oversold. I think the smart money's out and they're looking for other things. And I think the smart money's coming out of this too. That doesn't mean you can't go higher here, lower in the dollar. The odds on plays because of where you're at with losing embedded readings, getting them back. No, that's not what I think's going on. So you hear me talking about these Bollinger Bands, the importance of them. Learn them. Make that your New Year's article. Why? Because they're there every day for you to look at. It's not an occasional chart setup. Take a look at this. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all 3 of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.